Good afternoon, everybody. Welcome to the Washington, D.C. update on COVID and policy developments in Washington. My name is Paul Nathanson. I'm with the Policy Resolution Group at Bracewell. We used to give the number of webinars we've given since the beginning of the pandemic, but frankly, I've lost count, but it's been a lot of them. We're very happy to have you here today. I'm presenting today with my colleague, as always, Omar Nashashibi from the Franklin Partnership. John Guzik is traveling today, and as I think a lot of you know who know her, Caitlin Sickles is out on maternity leave, so you have Omar and myself for today. We have a lot to cover. We're going to talk about federal agency actions regarding vaccination mandates and things like that. The latest on infrastructure talks, if you've been following, and reconciliation talk, the news changes every day. And also how this is all going to get paid for. We'll have an update on tax provisions. There's been some activity on EU-US negotiations on steel tariffs. They're going on this week, and we'll get into that. And then finally, we'll talk about China tariffs. As always, if you have a question, you can put them in the chat and we'll try to get to them before the end of the webinar. If we do not get to them, we will contact you separately and try to answer them as good as possible, as quickly as possible. Okay, let's talk about some agency actions, both OSHA and IRS. And one thing that I wanted to emphasize here, that the Edelman is a public relations firm, and they come out with the trust barometer, and we thought this was very interesting that while there's diminishing trust in traditional leaders like the government, folks are turning to their employers. They are seen as being better prepared than their government to handle the pandemic and the responses to it. So when we talk about vaccinations and protocols and things like that, it's important to emphasize, that your employees are really looking to you for some guidance, because the trust in traditional government entities has diminished. So with that, I'm going to turn it over to Omar. He's going to talk to you about the latest that's coming out of the federal government.
I think that is an important point that he put out there, especially as we go through the next number of slides where employees are increasingly looking to their employer for information that they can trust, which is also why many of you are members of the NTMA and PMA, because of the benefits that you receive from hopefully webinars such as this and other programming and resources that are available between the attorneys and others. In the next couple of slides, we're going to run through what we believe we know on the vaccine mandate coming from the federal government, and then also the one with regards to federal contractors that's already in effect. A quick update on timing. We had hoped that by the time we had this presentation today, we would have the actual OSHA emergency temporary standard. Moving forward, as we refer to the ETS, that's what we're talking about. The ETS is the vaccine mandate. What we had heard is that they were hoping to have completed all of their meetings and review by the end of this week. And many of us, frankly, including myself, had expected a rule to come out late this afternoon to be published in Monday's Federal Register. It looks like they do have more meetings, as you can see here. You can schedule for this afternoon on Friday going into 2:30. What that tells us is we are obviously not going to get the ETS tonight. What they could still potentially do is publish it for Monday. Usually when they complete all of their meetings, as you can see, they've had 68 meetings so far on this, just since it was sent over to OIRA on October 12th for its review. What we've been doing as NTMA and PMA, working with our coalition partners, the Coalition for Workplace Safety, they did meet on Monday. We've got a readout with some of the attorneys that were in that room, speaking with the folks over at the White House. Again, OIRA is the Office of Management and Budget's review arm on these regulations. So they are getting close, meaning it's a matter of days. We're not looking at weeks anymore, as we had already expected it, if not today, then certainly in the early part of next week. We had not seen any further meetings scheduled for early next week. That could obviously change. So as of right now, it seems OSHA's last public input meeting is going to be today in the afternoon. What we do believe we know here, and again, some of this we discussed in our previous webinar last month, as it's based on information that we received directly from OSHA in a meeting with them on September 10th, and subsequent meetings with the Small Business Administration and other officials later in over the last several weeks. A couple of things that we do want to take a look at. Obviously, they're expected to continue down the path of 100 employees or more being a part of that mandate. Our sources are telling us that is truly arbitrary. It's not based in law. What they were trying to do is have be less stressful and less pain on what they determined as small businesses, those that traditionally would lack an HR department or other means to execute and monitor and go through this process. We don't think that many should be focused on that 100 threshold. We obviously have been hearing quite a bit of complaints and concerns that if they have 101 employees in the shop across the street has 98, they might lose one of their workers across the street. Ultimately, that number, again, since it's arbitrary, it's not an FMLA 50 or an Affordable Care Act type of 10 or 25 situation. It is more based on what the White House thought politically they could put through. We do expect some changes to that. We've already heard from some states, including Wisconsin and others, that they would likely seek a lower threshold. They are entitled to do so because of their OSHA partnership. The states can set new guidelines that are at least as stringent as what OSHA puts forward. And so in this case, you might see some states go as low as 50 employees or more. Our suggestion, again, is not focus as much on that employee threshold number, as that certainly could change, especially if a worker were to file a lawsuit saying that they should expand below the 100, which we fully expect. There obviously are going to be political challenges, such as those that are running for president from Texas, South Dakota, and Florida. And then there's going to be those that are challenged from employers. What we're hearing is especially those that are coming from employers and employees are going to be the ones that the courts take seriously. And they're likely going to group them up into a single circuit, is initially what we'd heard. So that way they can do an expedited review, and we're not looking at dragging this out months and months into next year. At least that's what we're hearing from both judiciary contacts and other folks that are dealing over on the legal side here in advocacy as well. What we do want to flag are a couple of things on this slide. Again, based on what we know, there's certainly going to be lawsuits on both sides to make it stronger, and also under what right does OSHA have to do this, which we covered in the previous webinar with regards to grave danger. One thing we are picking up, though, increasingly is that tier ones and OEMs are asking supplier vaccination status. And not just for federal government contractors. This is what we're hearing from our colleagues around town, other lawyers, other lobbyists, and they are telling us what in-house they are looking at. When the mandate came out, the Business Roundtable, one of the largest employer organizations in town here, fully endorsed the mandate and was standing with the president at the time. A lot of the reason for that is what we're hearing again from folks around the city is they're concerned about disruptions in the supply chain, similar to what happened with automotive in that May through July period in 2020. And that is a lot of the reasons why they are proactively, even ahead of this public mandate, proactively reaching out. Again, what we're hearing from our coalition partners of the workplace safety folks and their attorneys is, again, there's no injury either way until you have the rule issued. So we'll have a little bit more information of when that comes out. We'd like to spend a little bit more time, though, on the federal contractor for a moment for a couple of reasons. One, because that ultimately could be a model for many businesses and your customers as they start looking at it. But we also do know we have a number of subcontractors in our membership. Specifically, the rule does say that it covers contractors and subcontractors at any tiers. However, it does have an exemption for subcontractors that are solely for the provision of products and the manufacturing of products, and that includes all of you all. The language as it read initially in this guidance is that if you and your employee don't actually go to a federal facility, and that would include a Lockheed or a Prime, if you're not walking onto the facility and you're simply shipping a product to them, a manufactured good, then under the way it was initially written, it would not impact, and the mandate for federal contractors would not cover you if, again, solely for manufacturing of products. Here's the however. The federal agencies were strongly encouraged to amend existing contracts and all new contracts going forward after October 15 to include manufactured goods. We've already seen the language that was released on August 8th from the FAR, Federal Acquisition Regulators, and they've provided sample language to their agencies to include in their federal government contract. So even if you don't believe that you have to comply now, we would not be surprised for one of two things happening. Either the contract gets amended, which we've already seen examples of from a One Voice member, or what you end up having, in addition to it being amended, you could potentially just get a flow down coming from your customer saying, we want this purely for the disruption security. That's just what we are hearing from folks out there. And again, we're not attorneys, but on this slide, you'll see what the attorneys are trying to tell you if you are a federal contractor. Even if you are not, these will be some good policy points for you to take a look at in the understanding that there might be a need to move forward with whatever the vaccine mandate comes out for employers of 100 or more until issues are sorted out in the courts. What we're hearing, there likely will be some type of a transition period. We know employers are asking for that, as similar to what you have on the government contractors. The government contractors had until December 8th to comply, and that gave them about a 2-month, 60-day window or so. If they were to release this mandate now, they would probably want to time it ahead of the holiday season, so we could see some kind of a transition, but probably not overly lengthy, because that's likely what they're working their way backwards from people collectively coming together indoors to celebrate with family and friends. But this slide, Paul, if you can just quickly touch on just some of the things that your shop is doing. You've got a great resources there on labor attorneys and some of the advice that they're giving here for federal contractors of what they should be doing right now.
Yeah, thanks, Omar. So our Bracewell labor lawyers and OSHA lawyers have been really focused on this for since the mandate was announced, and advising many of our clients. And as you can see here on the screen, they really are emphasizing that you should take action now to at least study what federal contracts you may have and when they expire, renew, or extend. Confer with your own legal counsel. Now, my colleagues in the labor section, Bob Nichols, who is an OSHA expert and has addressed this group before. If there's a quick question or some general guidance that you need, feel free to contact me, and Bob's always happy to answer a question. I would just note that he won't be your legal counsel, but he's happy to answer any questions for PMA and NTMA members. He enjoys working with you guys, and he just talked to him this morning. But really, it's now is the time to take a look and confer with legal counsel about what rules are coming ahead, so that you can be prepared for what's coming. Thanks, Omar.
That's right. And even many of you have already done this, but understanding your vaccine status of your employees, many of you already have a point person on COVID that has been designated. You did all this a long, long time ago. So thankfully, most of you will be ahead of the game, but do recognize that we're still in the dark, as everybody else is, until they actually issue this. And then that's when things really ramp up. And so we're hoping to get more clarity next week, and we'll be sure to provide more information to all of our members on what is happening with regards to that ETS. But let's tie this back into what the CDC has done. If you notice the date stamp on this of October 15, the number of the slides that we're about to run through are all recent in the last several weeks, in that the CDC recognizes what the OSHA was working towards, and the CDC is getting ready to backfill and help answer, in their mind, any of the questions that might need to take place on vaccination. The next slides we're really hoping that can be resources to you all. But regardless what the ETS says, many of you are already looking at a vaccination program. Some of you have looked at other ways to support employees. There are some great updates that we did find useful that we wanted to flag right here. The employer vaccination programs, this is what the CDC and OSHA are likely going to be referring you to if you do move forward with some kind of an in-house or an off-site program. Those links on the left are, as they are described, they're pretty detailed in terms of step-by-step and ways that they can help you build a system to put in place. But on the right, what they're trying to help you understand is, do I need or am I a good candidate for an on-site location, or should we make arrangements for off-sites within the community for those individuals that are not? This is obviously going to be a case-by-case basis for each employer and the approach that each of those owners decide to take. But we wanted to at least present some of the resources that CDC has put online in terms of what they hand. If you are one of those companies that does believe they'd like to look into a clinic or some kind of an arrangement with a local community facility where employees would go, we would strongly encourage you, if you were going to do that, reach out to them now, because once the ETS comes into effect or comes into light, we would expect there's going to be a lot in your community, especially if there aren't a lot of options, a lot of demand on those types of services, and you don't want to get caught up running into a deadline. That's at least what we're hearing out there. The natural question that many are also asking is with regards to medical and religious exemptions and what would comply. Again, we are not attorneys, and so in this case, if you are presented with such a situation, you are strongly encouraged to contact counsel and see what steps must be taken to validate and what you're allowed to take, rather, in terms of verifying the medical or religious exemption that has been provided. The medical and religious exemption typically just refer back to the ADA. A lot of that is not new. However, they have updated, so what you're seeing is on the left is from the CDC's website in terms of the vaccines. That was what's on the continuation of what we saw on the previous slide. On the right-hand side is the language that the EEOC updated with regards to these areas about reasonable accommodation for religious observances unless it would pose an undue hardship as defined of more than de minimis cost to the employer's business. For example, on the medical, there's a different kind of reasonable accommodation that deals with undue hardship of significantly difficult or expense. This is something you're going to definitely want to deal with on a case-by-case, talk to supervisors, HR, and then attorneys. But this would be your reference guide for what the EEOC and the CDC have discussed in the context of vaccination requirements by employer that ultimately would be used as a pretense for the government as well. Another one as well we're going to talk about here, a previous slide with regards to federal contractors said testing is not an option for federal contractors. That is correct. Similar for federal employees, testing is not an option. We are hearing, however, that testing will be an option in the ETS for all workers, for all employers rather, that at this point are 100 or more. That guidance that just came out from CDC, they have a number of testing guidance that we'll run through quickly, but more for you to be able to use later. Again, you'll see the date stamp of October 7. You're starting increasingly to see the government agencies work in tandem in these spaces with regards to who needs to be tested, the recommendations that are made, and the overview of testing scenarios. Really taking a look on the top points, but let's start with the bottom because that's relevant to employers. Testing unvaccinated employees in a workplace setting is an example of a screening test. And then you look at the different types of testing, the diagnostics, to know whether or not a test is needed for those individuals. And this is an approach for employers or other settings as well that they put out there. Testing people obviously attended an event, or contact tracing, symptoms, all of those. That's not new to any of you all that have been on our webinars in the past. What is new though is the comparison of the different types of testing, the testing techniques that they've got on there. And so we do suggest that you go to this website that's listed here. They'll have a lot of support documentations and areas for you to take a look at with regards to testing. Just so folks are clear on the types of tests that are out there, PCR is the one that we would all do during the drive-through, lower your car window, we'll get back to you in 1 to 3 days. You can now buy them. When I got my booster yesterday at Walgreens, they're selling the PCRs for $130, but you still have to mail it in for somebody to tell you within 1 to 3 days if you've got it. Antigen is the other one that many of us have at home that you just swab yourself, 15 to 30 minutes. That gives you the go or no go. We put up here what the CDC had for you for a side-by-side, just to give you an idea for your HR departments as a quick reference sheet. If you are going to have testing in the shop for whatever reason, that these are the different tests that are available right now that the CDC goes for. Note that in the parentheses at the very top, these are not antibody tests. Antibody tests don't tell you if you have COVID now. They tell you if you had COVID. So what you want to do is make sure that you've got the terminology right, that you're putting into the employee handbooks that are put together, that you ultimately have reviewed and with regards to the response. Again, on this, you can grab that link down below and it'll give you more details of this cheat sheet that they put together. Lastly, on CDC, before we start transitioning off of COVID issues, is they've updated the all information in one place for employer links, which is very handy. So what we would suggest is when you are going through our materials, almost start with this slide as your baseline, and then you can branch off depending on what your immediate needs. So you're not going through and spending too much time and effort in areas that are already covered. It will allow you to do a county check. We just put in our location on Capitol Hill. It tells you what the requirements are right there. And this one will again tell you all about, we've been through ventilation and cleaning. We covered all of that in the past. We've covered respirators a couple of presentations ago. The most recent that you'll see here is the vaccination program, and the testing in non-healthcare settings are likely, and post-vaccination considerations. Those are probably the 3 areas on which we would suggest you have your HR folks focus. Lastly, this is not COVID related. This is just didn't have anywhere else to put it, but the IRS just last week put out a clarification on the R&D tax credit on refund information that's included. Typically in the past, what you'd have to do is when you submitted your R&D tax credit claim, is you could submit just whatever you felt, more or less, that would substantiate what your claim was going to be on that credit, on the refund. Now IRS is specifically asking for a number of identifying components, and you'll see those 3 bullets down below. This is just something that we'd suggest if you are big users of the R&D tax credit, talk to your practitioner. We know NTMA and PMA have relationships with a number of them. If you do not, feel free to reach out to us, but that's something you might need to start keeping track of moving forward as you look at that. Now on to what everybody wants to talk about. But Paul, something that's increasingly getting interest around town is on apprenticeships.
Yeah, so I don't know if folks realize it, but the White House announced that November 15th to 21st is Apprenticeship Week. So Bracewell will be working with NTMA and PMA to help promote all that we do to train the next generation of workers. And also, yeah, apprenticeship certainly is getting a lot of attention in Washington, D.C. And Omar, even from the work that you guys have done, that it's it's going to be part of the reconciliation bill, right?
Yeah, that's exactly right, Paul. We've been working on the National Apprenticeship Reauthorization Act, which hasn't been touched by Congress since, yes, 1937, when FDR was still president, only his 3rd term. Looking at where we are right now, the apprenticeship is definitely increasingly part of the conversation, especially now that the community colleges potentially got bounced. We'll get into that in a minute, but let's set this up. There's no question that reconciliation, that's going to be our terminology for the Democrat-only bill that's got a number of priorities in it, is completely linked to the bipartisan infrastructure bill that was $1.2 trillion passed, but with a vote of 69 total in favor. So we do believe that those two are connected, and there's no doubt in town. So one's not going to move without the other. Where do we start? Again, we had Bernie coming in saying he wanted 6.5 trillion. Progressives initially then came back and said, no, really, we'll start with 3.5. Manchin, still on the House vote, says 1.5 trillion. They go back and forth. Now that we've got a marker from President Biden, somewhere in where it's a loose 175, it could be as low as 1.5. But if we're going to be in that 1.75, 1.9 range, we think symbolically 1.9 makes the most sense, since that's what the American Rescue Plan Act was. The ARPA earlier this year was also $1.9 trillion. It's a lot of spending, folks. If you look at the 1.9 plus 1.9 plus the 1.2 trillion for infrastructure, that's $5 trillion in spending in the first 12 months in office. That's what Democrats are hoping are going to carry them through. But now that we've got a top line, or we're close to a top line, that's what we've all been waiting for. Now we backfill it. This is now Democrats are going to try to see what they can maneuver and fit into this legislation and what we can do to fight on the taxes. We'll touch on taxes on the next slide. But on this one, which you will see here, is much different than the presentation that we gave to another group even yesterday morning or the day before, because we've now seen that Democrats, once they were told it is not 3.5 trillion, it's going to likely be 1.7 to 1.9, then we really do need to go forward and take a look at what sacrifices, what cuts are Democrats willing to make. The latest as of this morning, as of an hour ago, the 12 weeks for paid family leave that Biden had called for is now down to 4 weeks with a means test. That's still loose. We think the 4 weeks will stay. The means test is still up in the air, but as of right now, it's for earners under $100,000, and that's the threshold that who would be eligible for the 4 weeks of paid Family Medical Leave Act. That's something that's been a big, big priority, not just for Democrats, but even former President Trump had it on his list of things he wanted to get done as well. So that does look like it's moving a little bit in that direction. A few other areas, as we mentioned, since what's out down below, since the free community colleges is out, what we're hearing is the White House, based on conversations they'd had with groups like us and others, really did see a need to push some dollars towards partnerships, industry groups, apprenticeships, workforce training. We are expecting 80, I think it's 80, an additional $80 billion, I want to say, that goes for workforce development. I believe it is 80. And that's going to be quite significant. That's above what is in the infrastructure bill, and it is above what's going to be in the federal funding legislation there. These will be for registered apprenticeships, but we do know that they are going to look at also targeting programs, not just to the laid off, but how to train some of these 27 weekers that are now classified as long-term unemployed. A few areas, though, because they do want to keep pushing for the paid leave, then they had to sacrifice on some of the other areas. Again, clean energy and affordable childcare, those provisions as of right now are bounced. But what you all care most about are how are they going to pay for it. There is a big difference in our tax lobbying strategy when we thought we had to pay for they were looking at about a little over $2 trillion in tax increases. We are not looking at anywhere near that size and scope. Two things have happened and shifted in the last 72 hours. We have gone from talking about a bill that was going to be over 2 trillion and now to one that's going to be clearly under 2 trillion. We've now also said that we don't have to raise as much revenue because we're not talking about spending as much. Those two things went hand in hand. Now we got our top line, we now figure out how you're going to pay for it. These are all rumors. Would not even, I'd put this in pencil, but as of right now, we are hearing the Arizona Democratic senator is outright saying no to the increases in tax rates. That's what she's being very careful in the way she's phrasing them. She's not necessarily saying tax increases. She's saying no to tax rates, which as of right now, if you take her literally, that would mean you keep the C corporate rate at 21% and you do not take it up to the 26.5 that Democrats wanted, 28 Biden wanted, or the 25% that Manchin said he was willing to support. That's where you are right now. There's some uncertainty. If she does hold the line, then we might be looking at, we are not going to have the C corporate rate that many of us had been fighting against and planning in some ways for. There are going to be some changes on that in a couple of spaces. We are looking at a 15% minimum C corporation tax. That was brought up in July of this year and then faded. That around the same time the OECD 15% global minimum tax came into scope. It's unclear if they have enough support for a 15% minimum C corporation rate, but they believe it makes good politics. The reason being, there are 55 Fortune 500 companies that did not pay any taxes, zero taxes federally last year. There are 1/3 of all Fortune 500 companies with assets over $1 billion that paid zero taxes in years 2019 they looked at. Same thing, there's 1/3 of all companies with assets under 1 billion on the Fortune 500 that paid zero in federal taxes in 2019, and there's a handful that paid zero between 2017 and 2019 when Congress, as tax committee, looked into this issue. They believe for that reason, there could be a successful political effort to not raise the 21% rate, but effectively say that you cannot lower your tax liability below 15% through credits and deductions. That is the approach that increasingly they're starting to look at, because if you take off this 26.5% off the table, you now have a $540 billion hole. That's what that provision was going to raise, $540 billion over 10 years if you increase that. Now you've taken this away, you've got to come up with other measures to raise that revenue, whether it's a 1.5 or a 1.7 or a 1.9 trillion dollar bill. We do believe the 15% global minimum tax definitely has some legs. Republicans are objecting, saying that's technically an international tax treaty and you have to move it separately. Democrats are going to push the parliamentarian to let them move that. So that would be on the multinationals. Mark to market. This is a term that increasingly you all might want to get familiar with, in that it's been a proposal that's been around for Democrats for a bit. Effectively, what they want people to do is start paying an annual tax on the value of that capital gain or the derivative or the carried interest, and have it taxed annually instead of at the point of transaction rather. Because if you look at some of your capital gains with step-up basis, you've got generations that literally have not paid taxes on the appreciation of the value of that property since it was first bought. That's what we fought to protect, step-up basis. Their rationale, especially in the Senate, is that you do need to, they're not taxed, this is unrealized gains that these folks are getting because of the appreciation, the value of their holdings, but they're not paying any taxes on the appreciation. The idea would be to create a mark-to-market system where you would tax it at their ordinary income rate for that taxpayer where they fall. That is getting more traction. It was laid out by Senate Finance Committee Chairman Wyden back in early September, and that might get some additional legs. What we are hearing, though, that is off the table is the elimination of that step-up basis. There was an effort by Biden and others. He wanted, when it within the family even sold the company, that you would have to then pay the tax on the company from the first day and the appreciation of the valuation back from the first day it was founded. So if you had a company started in 1950 that's been sold over and over the years, the tax change that they sought would have you, that fourth generation, paying the tax on the appreciated value from 1950 to 2021. That's what's called step-up basis. They wanted to eliminate that step up in the value. We've been able to protect that. We did get confirmation that that is a hard line for a moderate Democrat. And to be honest, from an NTMA and PMA standpoint, What we've been so successful doing the last several years is finding a way to work with moderate Republicans and moderate Democrats. In this effort, those moderate Democrats have really paid off. I mean, our support for them in a number of ways, our cooperation with them on political action committee and donations, they've held the line for us. We would not be in this position on taxes were it not for those moderate Democrats, largely because Republicans don't have a seat at the table. Lastly, on taxes, because this is a top issue for our members, as Paul will talk about here on the next slide, I do want to mention for our high tax states, our SALT, state and local tax deduction, what we're hearing on that, that is a hard line for at least 3 or 4 Democrats in the House where they need a fix or they will not vote for the bill. What we are hearing is Brendan Boyle, a Democrat outside Philly, wants to do a 2-year suspension of the SALT cap, so that way there wouldn't be a limitation for 24 months. That might be too expensive. The other more realistic is probably a slight increase in the limitation from the current $10,000 number. Last item we want to flag on here, I just got another email update on our lobbying efforts. Bank account reporting to the IRS. Many of you have heard about this issue by now, as President Biden wanted to require bank accounts with $600 or transactions and more and in balances to be reported to the IRS for investigation. They believe somehow they scored this at raising over $700 billion over 10 years is what they score it at the $10,000 threshold. So Biden got a lot of pushback. The $600 is out. They're now discussing the $10,000. We've sent letters to the Hill, to the administration. One's going to go to the president in the next hour, and we've been pushing on this one quite hard in terms of the efforts. I think we'll make some more progress. It's unclear where we will end up with regards to that one, and still some uncertainty on the pass-through. Cinema seems to be saying no rate increases, which would likely protect most of us, but Wyden, who's writing this bill, is still pretty insistent that Section 199A qualified business income is limited to certain taxpayers and not those earning over $500,000. Those are probably still the two that we don't have as good of a feel on it, but Paul, based on this slide, we can really see where our members' priorities are, and we've been most successful in protecting Section 179 and 100% bonus depreciation. Those are not on the table as of now, and we've been really successful there, Paul.
Yeah, I think this, as you know, we are guided by the annual survey that we send out. And that is the priorities that you express in there is what guides the One Voice team in Washington on our lobbying and communication strategy. As you can see, according to the survey that we did earlier this year, the most important tax credits and deductions, 179, bonus depreciation, R&D tax credit were the top 3. Omar just talked about state and local tax deduction, which is number 6. So it's really important that you participate in those surveys, and kudos to Omar and John and their team really for focusing on preserving the most important deductions and credits. And I can tell you and I know Omar has been extremely busy this week and the last few weeks, and so is our tax lobbyists who focus on energy taxes, and there's a lot in there being discussed now that they've gutted the clean energy part of the bill out on what's going to get some credits and what's not. So I think Omar's taking an hour out of a day where he's going to be on the phone constantly and email regarding these issues.
It really is. It's very, very fluid. And the conversations that we were having a week ago, frankly, are now not the same as the ones we're having now. And that's where Cinema doing what she did as late as she did really does change quite a few of the narratives and some of the strategies that we're undertaking. And to put it in perspective, as we'll close out here on the reconciliation and the timelines of what we're hearing, they wanted a framework by the end of today among Democrats. Pelosi just came out on the lawn here a bit ago and said they're very close. They've got 2 or 3 outstanding issues on healthcare. They've finished the climate section, is what she's saying. She generally does this to move her members towards yes. We're hearing they're still further away. A framework, however, we do believe will be announced by next Friday before Air Force One wheels up to go to Rome for the G20 meetings that we'll touch on here quickly in a second. But we do expect that the Democrats will release something here in the next week, if not early next week. We potentially will see some votes in November if they can get it together, but they're still not done yet. I think the media might be a little bit more optimistic from the pen to paper that we're picking up, but that certainly could change as we get developed this afternoon. We will let you know where that might end up. But Paul, the big news right now, and we even just saw Catherine Tai come out with some statements. That's been tough, but they're making progress on steel and aluminum negotiations ahead of the G20 meetings coming up on October 30th and 31st.
Yeah, as I mentioned at the top of this webinar, that Ambassador Tai flew over to the EU on Tuesday to finalize negotiations with the EU regarding the steel tariffs, as well as the retaliatory tariffs that the EU placed on US exports. What's driving this and the urgency is that the EU is scheduled to double tariffs on US exports to 50% on December 1st. And I just talked to a Commerce Department official yesterday who said that they have to reach a deal by November 1st in order for that to have time to dot the I's and cross the T's. So that's what's driving them. He was pretty confident that there was going to be some kind of agreement and announcement coming in the next couple days. It could be as early as today. So it does look like, well, we're getting varying reports. Media reports said that tariff rate quota is under discussion. That's what the U.S. is pushing for, and that means that you're allowed a certain amount of steel into the country tariff-free, and then when it hits that quota, then a tariff is applied. This creates a lot of havoc in the market as people race to get the tariff-free steel into the U.S., and that's why we are on the record opposing it. The EU has opposed it in the past. It does look like they're coming to some kind of agreement that is similar to the USMCA, the new NAFTA agreement that the U.S. made with Canada and Mexico, where there'd be a surge monitoring system prior to tariffs being imposed. And right now, I do think that the negotiations are all about what that number is regarding how much steel can come in from the EU tariff-free before the surge monitoring system would kick in, and then there would be discussions about tariffs. There's also, I note that Ambassador Tai met with the European Steel Association to talk about dealing with surges from China. So I think that's a positive sign that she's hearing from industry over there as well. We also got an invitation from the Commerce Department for PMA and NTMA members to come in virtually, because they're not doing in-person meetings, to meet with the Deputy Assistant Secretary for Manufacturing, as well as, and then I got this call yesterday, I have a Commerce official, they wanted to add another person who is dealing with exclusions. So we're setting up that meeting, and we'll be reaching out to some folks to have a good representation of manufacturers. But other than that, there has some action in Congress where Senator Toomey, who's retiring, and Senator Warner reintroduced their Section 232 reform legislation that would reform the way that these 232 tariffs are imposed and give more power back to Congress to approve these tariffs. Senator Toomey's retiring. Frankly, I don't see this legislation going anywhere yet, but it is a good way that we can continue to spotlight the problems that these tariffs are causing for U.S. steel and aluminum using manufacturers.
So take a look. By the end of this coming week, we will have a framework announcement before the president gets to Rome on Saturday, Sunday, or you'll see something over the next week start to trickle out. It will not take effect right away, but we will at least start to see a pathway for Europe only. We are not talking about China. We definitely are not in favor of that. What we are looking at right now is how do you address it with our allies as well. But speaking of China, quickly here, they did complete their 8-month review. On October 4th, the announcement came out that they are going to continue to apply tariffs. We do not expect the tariffs on Chinese imports to be lifted prior to November 2022. In fact, we're even hearing about industrial subsidies being a focal point of this administration, since the previous one only did intellectual property theft. Our concern is subsidies, we think, is a lot worse than the IP theft. So we would encourage the administration to look at it to an extent and see what issues that are out there. And for the near term, you will continue to see those tariffs in place. They did announce the other day, though, that they are going to allow a limited tariff exclusion process for 549 items. That link at the bottom will show you what the document that you'd have to fill out takes a look at looks like. And you can also go to the list of the different materials and goods that they're going to recommending or offering up to import for duty-free without having to pay the 25 or 7.5% tariffs. Feel free to reach out to us or to PMA or NTMA if you have any questions about this list. The window for requesting or opposing a tariff exclusion is going to close on December 1st that evening. Again, anything that we can always do on the trade issue, supply chains, please let us know. We're more than happy to help. As we get ready to wrap up here, please do type in any questions you might have on the right-hand side. As always, you can get to us. We're going to do a podcast next week, probably about midweek, that will hopefully have a little bit more clarity on the ETS and where things stand with regards to Democrats. So please be sure to, on any platform that you subscribe, listen to our podcast. You should have one about mid to late next week as well. And then as we close out, Paul didn't want to know the numbers. I actually pointed at the website and counted 31 COVID and policy webinars that we've done since March of 2020. So there's quite a bit out there for you NTMA members that are coming to town next week as part of the Engage conference. We're looking forward to having you. That presentation we provide will obviously be much different, up to date. We're going to talk about politics, a bit more on workforce and some other areas there. But for today, as we get ready to wrap up, please, any questions that you all may have, please feel free to either type them in the question box or to email us directly afterwards. We try to keep these webinars to about 35, 40 minutes or so, and we're coming up on that now. We'll stick online for a second, Paul, and see if any questions come in.
Great, and I do encourage NTMA members to attend the Engage conference. As Omar said, it'll be a completely different presentation. It's like going to an improv show. There's no two shows alike.
That's right. Seeing no questions come in, we can go ahead and close out. We know we had a lot of uncertainty today. And we hopefully will have even more answers coming. We're going to get back to our lobbying jobs right now, as we've got a lot on our plate. One more question did come in actually on OSHA testing for ETS. Question: who pays for the COVID testing under the OSHA ETS? As of right now, OSHA did not answer that question on September 10th. They believe that you all, as the employers, will pay for it. That would be subject to the Medicaid credit or the deduction for medical expense that the IRS has now for over a year for PPE and other equipment. They would likely allow a credit for that. Whether or not it's a full reimbursement, that's unclear, as that might have to actually come from, I don't know that OSHA could do that on its own, frankly. That might have to take something in Congress. That's a question that we raised on September 10. The other question we raised was who pays for the transportation if you're going to go to a community site for vaccinations. We heard from that is going to be a potentially Department of Transportation answer. OSHA did not want to answer that. She said, we won't be addressing it. That's something that Department of Transportation. The other thing she told us that they would likely not address would be on unemployment insurance. What if somebody quits for refusal or is terminated for refusal? Are they eligible for state unemployment? She deferred to the states and said, we will likely not address that. The states will likely address it on a case-by-case basis, is what we're hearing based on those. But again, that's now almost a month old intel because they've been pretty tight-lipped, but we should hopefully have more clarity on that early next week. And the folks at Bracewell will provide more information as we have it. Any other questions? Seeing none. Thank you, everybody. Enjoy your weekend. We'll talk soon.